Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at MarketSite, we have Don Montanaro, president of Firstrade, as well as Jim Fowler, chief technology officer at Nationwide. They join me to discuss tech trends in finance and how AI is going to shape the future of the space. Gentlemen, it's great to have you with us. Welcome to Trade Talks, and let's just start with a brief background here, Don. Tell us about your company, where it sits within the financial ecosystem.
Sure. Firstrade is a retail brokerage firm serving, a discount brokerage firm serving retail investors. So these are self-directed investors that do their own research, make their own decisions. They might be planning for retirement for themselves, their family, planning for kids' education, just trying to better themselves and their family's outcome in the future. So we provide research tools and trade execution for them. All
right, and more about Nationwide. It's more than just the jingle.
More than just the jingle. $60 billion company that's about 60% financial services. We are the largest producer of retirement plans for public sector, and then 40% property and casualty insurance, what you know us as home, auto, and commercial.
How is AI impacting the space?
You know, I'd say when you look specifically at AI for the last 10 years, it's been part of the insurance and financial services industry. A lot of our decision making is done through artificial intelligence. If you come to us for a life policy, a simple life policy can be bound in 15 minutes and it's without a medical test. AI enables that. What we see now is generative AI. And what we believe generative AI is the new customer service superpower. And so when we think about this, we start looking at things like a product that we're developing and launching right now called Sales Assist, which is focused on our financial services business and our sales teams. And in the old world where they might have taken a call that was complex about a product that wanted to be sold and have to go do the research, we now have given them an interface that gives them access to tens of thousands of pages of documents. They can ask a simple question, and instead of having to call the broker or the intermediary back, they can give them a real-time answer and point them to the documents that they need to be able to sell our products. Mm-hmm. So customer service goes from getting answers in seconds for our customers to things that might have taken days in the past.
Right, and of course, Don, I mean, speed is everything in the trading business, and they're always looking for new types of analytics and tools to get the edge in the market. So how is AI impacting the space in particular and what you're doing at Firstrade?
Yeah, so really, I can think of really three distinct layers. One is our first applications of the new LLM tech. We're all in what we call the back office or the back of the house. So applying to operational tasks, compliance tasks, and incredible efficiencies that we're getting. I mean, we're having some compliance tasks that used to take 2 hours, take 10 minutes. Like super, super efficiencies. The next layer is bringing those tools into the front end for the customers to be able, the clients to be able to interact with them, to get faster and better and clearer insights about the investments they want to make. And then overriding all of that is we're all trying to figure out how to make money on the theme as well in this business, which is the super fun and interesting thing. What are the stocks that are really going to be winners here? What are the companies that are going to apply this tech, as we're doing at Firstrade behind the scenes, to be more and more proficient, more and more just do more business with fewer people or the same amount of people and grow the business 5 times, which is really the way we think about it.
Yeah, I mean, if you think about from the library to the internet to what AI is, making available to investors. I mean, look at the way trading platforms looked in the 80s and 90s relative to what investors and traders have now. I mean, it far surpassed anything that we had on the institutional level. It's really remarkable.
And the speed with which functionality and capabilities are moving downstream from the institutional desk to a retail client's tool set, even in a mobile app, is incredible. And right now we're moving quickly, again, to bring those things out of our back office success and to expose them on the front end in the next couple months and give our clients those tools to really be able to just think the way they think and get to the information they need more quickly, rapidly, and then make a decision and place a trade.
Right, and Jim, let's talk about risk management for a moment here, because Nationwide, for all intents and purposes, is a risk management company. And I understand you have a red team, blue team approach for understanding and managing risks around AI implementation. Tell us more about that.
Yeah, so very much like Don said, the blue team is thinking about the benefits of artificial intelligence. How can we drive top line growth? How can we be more efficient at how we operate the company? How do we provide a better customer service? But in parallel with that, we have a red team that's thinking about all of the risks associated with it. So from a cybersecurity perspective, how can artificial intelligence be used against us? They're thinking about how are people going to use image generation to create fraud in our claims process. They're thinking about the regulatory impact that's happening. And that's leading us to some really good outcomes. You know, one of the risks is, you know, the technology sounds great, but there's a cost to it. And the teams kind of work together with an idea they wanted to launch into the environment for our customer service reps, and they started looking at the cost and they found there was an issue. So what that launched for us out of the red team is we now have I call it the speedometer, which for every new capability that we build using generative AI, it tells you in dollars and cents how much did that transaction cost. And we require all of our teams to actually look back at that when they're trying to kind of build their business cases. So we make sure that we're appropriately implementing it. The same goes when you think about bias. How do we train our models to avoid bias going forward? That's the benefit of having a red team thinking about the risks that go along with what the blue team wants to drive with the benefits.
Yeah, and you had mentioned cyber before, panel for another time.
Yeah.
However, AI, it could be used for bad actors and then also good actors trying to mitigate what the bad actors are doing. So it's almost a double-edged sword sometimes.
Yeah, you know, our Chief Information Security Officer, this is what he has his team focused on, and he has actually a red team within that team that is looking at how a lot of the bad guys, the bad actors, are actually using generative AI to create new versions of old vulnerabilities that are tweaked just enough that the software we have to detect them doesn't find it, but good enough that they can start to break in. And so his team is using that same methodology to think about how do we build extra controls, things that can identify ways in which old vulnerabilities or new vulnerabilities may be tweaked in just a little way by generative AI so that we can react just as fast as the bad guys do.
So it's almost like playing chess versus playing checkers.
It's absolutely playing chess.
You had mentioned before, Don, that AI is enabling for more efficiency. Does that mean it's replacing some of the roles within the financial services industry, enhancing some of the roles? What are your thoughts there?
For a company of our size, we've got 100 plus employees. No, that's not the dialogue that we have inside our organization. We talk about, can we grow this company twofold, threefold, fivefold, tenfold, and maybe grow personnel 10 or 20%. That's the kind of productivity we're talking about. And I think any company you're looking at, I think productivity is about to be redefined in every sector. And that's going to mean a reset of expectations for price to earnings ratios, for profit margins. It's just going to be a change, and you're seeing it push the market right now. Certainly we're going to have some corrections, but fundamental change in efficiency and therefore productivity and therefore the margins you can achieve.
Yeah, and in other areas of the financial services industry, we're talking about this off camera, whether it's financial planners or wealth managers, because of the efficiencies that AI is creating, they're actually spending more time with their clients and thinking of ideas, so it doesn't necessarily take away that creative editorial expertise role.
Remember the word, you know, we say AI, the first word is artificial, right? Non-human. So the human role is not going to be replaced. It's actually enhanced when you deploy this technology. So yes, our brokers and our customer service reps can spend more time with the client, really getting to know them, understanding them, and giving them a personal level of service that's supported and fueled by the technology. It's really a great time.
Yeah, and Jim, at the end of the day, leveraging artificial intelligence, machine learning, other predictive technologies, emerging technologies, it's nothing new in the financial services space. As we were talking about, again, off camera, ChatGPT, as an example, became part of the conversation with the consumer. And then, you know, it sort of took off with media and so forth. So leveraging these emerging technologies, no, it's not new nationwide.
Yeah, no, not new. You know, we just reported our earnings this week, and we third year in a row of record sales earnings, and we're doing it with essentially flat headcount to where we were 3 years ago. And that wouldn't be possible without artificial intelligence and technology that is automating away the clerical work to allow our humans to be uniquely human. And they bring things like empathy to a discussion, judgment to a discussion, creativity to a discussion. And so as we've thought about the evolution of artificial intelligence from our associates' perspectives, are jobs going to go away? No, jobs are going to change. And we want to make sure we're bringing them along for that change. And so, as an example, we require every associate inside the company has to take 20 hours of training. Half of that is technology training every year, trying to position them for the jobs of the future. We were kind of talking before. I go back to the beginning of my career, one of the first technologies I used was Lotus 123. And when that came out, people thought the jobs of the accountants were going to go away. And to some extent, when you look today, there are less accountants, but there's a whole new job called financial analysts. It goes back to the discussion you brought up, Don, where there are people now who can spend more time analyzing the data that the accountants used to create, that now machines create to have better outcomes and make better recommendations to the people they advise.
Yeah, I think it's really, you really start to extrapolate fresh ideas and being able to identify that piece of data that has become essentially clerical work.
Yeah.
Yeah.
One of the super interesting things also is the speed with which things are moving. So fast adopter of technology here for sure. And throughout my career, I've run into certain people who've given me this is not a sprint, it's a marathon speech. Well, this stretch right now is a marathon we have to sprint through. Like the changes are coming so fast. We at Firstrade, we've got our sneakers laced up and we're knees to chest because we know whatever changes we make 2 months from now, we're going to have to take it to the next level in another 2 or 3 months and another quarter. And things are just moving incredibly fast.
Right. Well, with every iteration of technology, it continues to move faster and faster. I forget what law that's called.
Moore's law. Used to be called Moore's law.
Yeah.
Yeah.
But there also has to be some, let's not call it oversight or compliance. I mean, especially in financial services, we are probably one of the most heavily regulated industries next to healthcare. You also want it to be safe and not just putting something out there for the sake of saying we told a story in 2023, now we need to have a product and revenue line in 2024 to justify the multiples or valuation of our company. Right. So there is a balance act that needs to be maintained there as well.
Yeah. So it's really about, just applying your same strictures that you have in other parts of the business to this new technology and not be so wowed by the technology that you throw your old constraints out the window. To Jim's point, you have to have everybody in the organization bought in and eager and embracing the technology. Those companies that maybe are of a certain size or have staff that might be afraid of losing jobs, there's going to be resistance from below to adopting this technology, and those are the companies that will lose. If you're not, as a leader in your organization, getting everybody to understand the benefits of this and that, no, we're not, to Jim's point, we're not trying to eliminate jobs. We're trying to grow this company, be more and more profitable, and make your job more interesting. Those parts of your job that are rote, that a machine could do, a machine can do well now. Now we have to have proper human checks and proper filters and proper compliance and risk procedures to make sure we're not putting ourselves, putting the markets, putting our clients at undue risk. But the benefits of this technology in our space for what we can do for retail investors by far outweigh the risks.
Yeah, it certainly does. Well, here's an interesting question, Jim. We understand the efficiency and all the opportunity that AI presents. Let's say, for example, something goes down or the internet is down or whatever. Do people still need to know the underlying, okay, so Captain Sully, remember when we landed the plane?
Yes.
He had the technical and physical know-how to do so, right?
Yeah.
What happens if there's a glitch with AI?
Yeah, I think one of the misconceptions is that people aren't still going to be involved in the creation process. Somebody has to train the models. Somebody has to train the technology. And I think that's the way you're going to see the job environment change. When we talk about this with our associates, we've opened up GPT-4 to every associate in the company with guardrails, where it's in our tenant, with our data, things that can't leave. And the reason we did that is we want them to think about how do they train the machine to do their job. It's not that their job goes away, it's that they now become a trainer of machines that are helping them do their job. And so yes, resiliency and reliability are of utmost importance. We've felt that in the last week with a couple of fairly large outages around the world on big tech platforms. But I think people have this mentality that it's back to machines are going to create everything going forward, and I just don't believe that's going to be the case. I go back to humans bring creativity and reason and judgment. Judgment is not something that a machine can do on its own, and that means there has to be somebody to train it.
Yeah, I think sometimes we think Terminator in our heads
when
you think about AI, and that really certainly is not the case. Don, as fast as technology is moving, how do you see your company, your space within fintech, how do you see that evolving, let's call it the next 3 to 5 years?
So what I think is might be a back to the future kind of story. So I'm old enough to remember when dealing with a broker was something that was really restricted to wealthy people. And that experience was calling up your stockbroker on the phone and asking him a lot of questions. It might have been questions about your account, about the market, about news in the market, about opening a new account, about moving money. And you had one agent you spoke to, and you didn't really have to think about the fact that that stockbroker that you were talking to was accessing one terminal over here to get your account information, another terminal over here to wire an order to the floor and back, another terminal back here to check news, or maybe a newspaper to read a news story to you. You didn't have to think about where that agent was going to get the information or to do the service that you required of him or that you wanted, and you just follow the train of thought that your brain took you on. Then to open the markets up to the millions and hundreds of millions of people that we've been able to open the markets up to with tech, with the internet, with the mobile apps over the last decades, we naturally organized all those tasks and bits of information into menus and screens and in a logical way that we could present it and that our clients could find it. But that's not really the way the human mind thinks or retains information or jumps from topic to topic or task to task. And that's one of the real beauties of this technology, is that we can bring the experience into perhaps one dialogue box where it's an agent. You ask or tell it what you need in the sphere that we serve you in, and it can get it done for you. Like, that's a really great and convenient future.
And Jim, when you think about it from the perspective of a risk management publicly traded company, so you finally get these tools on board, how do you see a company of that size evolving in the next 3 to 5 years? You're not as nimble as a smaller startup, and there's a lot of moving parts and a lot of silos that need to be brought together under this one AI umbrella. How do you see companies such as yourselves evolving over the next 5 years?
Yeah, I think for large companies it helps you evolve faster. I think if you can lean in and garner the benefits that come with these products, you're going to find your company has more opportunities for growth, more opportunities for efficiency. I'm really excited about the idea that every associate, all 26,000 of our associates, could have a virtual assistant, a set of virtual assistants doing work for them. I have this vision, and we've actually started to build this out, of you call into a call center to file a claim. Maybe something happened to your house or your car, or maybe you have a question about your retirement plan. I want the call center rep to have a human conversation with you and hear what's really going on in your life. And I want the virtual assistant to be booking you a hotel and getting you a car and transferring dollars into your account. I want to make sure that they're focused on the uniquely human aspects of what we do, where we digitize the ordinary things away so that we can create a really extraordinary human experience. And I think that's what large companies, if they can harness it, will figure out, is it's a much better customer experience.
I think that makes sense, because it can be frustrating when you call in and it's a machine on the other end, or you have to do something with the chatbot. But there are circumstances, particularly when it comes to finance, which is incredibly personal to us, next to our health. You want to hear someone, and you want to be able to have that touch point. And to Jim's point, the other administrative stuff can be done more efficiently.
Yeah, for us, a customer service touch with a self-directed investor who's really used to finding their information and doing their transactions by themselves online, you would think that makes the human interaction less important. It actually makes it way more important, because our typical client maybe contacts us 2 or 3 times a year. That's a rare and wonderful opportunity to get to know them and to have empathy. A machine can't have empathy, and we've all had that weird experience with a chat bot where it's pretending to have empathy. It's a machine, right? But empathy is a real thing that humans can only feel for other humans and display for other humans. So understanding that customer service call, which is often, again, in the trading business, somebody who's upset, scared, or confused about something going on. I don't understand what's happening in the market, what's happening with my account, what happened with some money I moved, what it might be. And to address that concern and turn it into an educational moment where the person, the client on the other end of the phone, takes that heartbeat down a couple beats.
I would imagine when markets are volatile, especially like what we saw in the beginning with COVID as an example, right? That the call volume probably...
It spikes.
It certainly spikes. And then also with Nationwide, if your house just burnt down, you need someone.
If you call and you want to pay your bill, you don't want to talk to anybody. You just want to pay your bill.
Yeah.
But if your house burns down, or you're taking that first check out of your retirement plan, or a loved one passed away, you want a person, and we want to make sure there's a person there. So it's the smart use of this technology to be there in the moments where you just want a digital experience to get it over with, but have a human experience that is extraordinary in those moments when you need it.
And again, for that customer service rep, it's not a terrible future. It's a wonderful future ahead for them. It's really spending all your moments really caring for the customer and not doing the tasks that are redundant and that a machine should and can be doing.
All right, we'll leave it on a human note there, gentlemen. Appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.